Let's talk a little bit more now about proprietary funds. And again, remember the two types of proprietary funds are enterprise funds and internal service funds. And let's talk about their financial statements. You're going to have three financial statements for the proprietary funds. The statement of net position, which is a lot like a balance sheet. The statement of revenues and changes in fund net position, net fund net position, is going to be the income statement or the P&L. And the statement of cash flows is the statement of cash flows. So we use slightly different terms, but they're the same basic principles because a proprietary fund is really there. I don't know if it's there to make money, but it's there not to lose money. So your statement of net position, which is like a balance sheet, is going to report all the assets, including fixed assets, investments. And it's going to report all the liabilities, including long-term liabilities, because this is not a governmental fund. And the net position section has got to have three sections. I mean, it's sometimes not going to have restrictions. But it's going to be broken into basically three sections, similar to what we saw before. You'll have invested in capital, net position invested in capital assets, net of related debt, and that's what I just went over before in the previous section. And then you'd have restricted because of restrictions beyond the government's control. And this would be a situation where, let's say the government, the proprietary fund could be holding assets that it receives a grant for, and it can only spend the money on certain things. So in that case, it may be cash and it may be a liquid asset, but it can be only spent on those things, and therefore it's restricted. And so that's going to be placed into a separate section of the net position. And then unrestricted is going to be everything else. Statement of revenues, expenses, changes in net fund position is similar to the income statement. And we're going to separate operating and non-operating revenues and expenses to provide a little bit more information. And most companies do the same thing. It's actually, GAAP doesn't say you have to do that, but most companies do it anyway. Statement of cash flows is a statement of cash flows, but it's arranged a little bit differently. So the normal statement of cash flows, as you know, follows the format of OIF. Operating, investing, and financing. That's what we normally do for regular companies. For government, it's a little differently. I don't have an abbreviation for it, but you'd have operating at the top, and then you'd have financing next. And you have two types of financing. You have what's called non-capital financing activities and capital and related financing activities. So capital and related financing activities would be financing to acquire capital assets and other capital transactions, let's say. And then all other financing activities would be cash flows from non-capital financing activities. And then at the bottom, you have cash flows from investing activities. I actually think that this is much more logical than the financial accounting one, because this is where the money would come from to make the investments. And here you could just see a description of what I just said. Operating activities would be providing services and delivering goods. Non-capital would be not related to capital activities. And then capital and related would be acquisition, disposition, construction, or improvement of capital assets. And then investing activities would be all investing activities, and this is new, interest and dividend revenue. So unlike companies, interest and dividend revenue are investing activities. They're not operating activities. In a regular company, interest and dividend revenue are operating activities. So looked at in one way, if it's a capital activity, if you're raising money for capital activity, like acquiring, disposing of, also receiving money from disposing of a capital asset, constructing, improving capital assets, that's going to go right here. All other financing activities are going to go here. The money spent on investing activities or received, also interest and dividend revenue, are all going to go here, and everything else is going to be operating.